Ethereum does not look good, and there's a lot of technical analysis that are showing a death cross pattern present on Ethereum. And out of the times that this happened on Ethereum, most of it, so more than 50% of the time, these were very bad for the short term, meaning that Ethereum kind of got into a bear market, losing a lot of momentum. Before doing that, it had a little bit of a dead cat bounce, but then we saw a huge negative impact on the price itself of Ethereum. And right now we are indeed inside a death cross pattern. So will Ethereum lose the current price that it has around 1900 and will it tank just back to the $1,000, or will it hold strong? And now we're going to have a next leg up, which is usually what happens in the remaining parts when the death cross is not negative on Ethereum. So that being said, we're going to be taking a look at some data right here, some articles, and we're also going to cover Bitcoin and Solana as usual. So let's jump right into it. So Ethereum is currently experiencing a death cross, which is a very bearish signal when a shorter moving average crosses below a longer moving average. So it could be 50-day moving average crossing below a 200-day moving average. Some people do it 100 and 200, but you get the gist. When a smaller time frame moving average crosses below a longer time frame moving average. So which is the case right now. As you can see, the 50-day moving average has crossed below the 200, and the 200 is a very strong moving average. We use it for Bitcoin, we use it for a bunch of other coins, and also for technical analysis out of crypto itself. So the 200 moving average is super strong and important, and when combined with other indicators like volume profile, like point of interest, these can give you very precise and very good data to get in, out, DCA on your favorite coins. So for Ethereum, crossing this is not very bullish at all, but we have to take into consideration a few aspects other than just technical analysis to put in perspective and weight it out together with everything that we have to understand if this will be just another case of a death cross being very bad, or like it happened with other times, that it won't actually stick and we're going to see an upwards movement, so returning back to being bullish. So why is a death cross so scary, and it has a huge impact on what traders think the market will do? I see a lot of people talking already at the starting stages of a bear market, and we can see right here that 2018 and 2022, they both had the beginning of their bearish cycle marked by a death cross, meaning that the lower EMA crossed below the higher EMA. So which happens right here in 2018, we saw a drop of 90%, and in 2022 we saw a drop of 72% before the market started to slow down and then correct once again. So will it means that now it's time for Ethereum to do the same thing and to crash like we saw in 2018 and 2022, or will this be just like it did in 2020 when we actually had a death cross showing up in the pattern, but then we bounced back up? We never had that cat bounce that we usually have, and we actually saw here in 2018 and 2022. We first saw a dead cat bounce on Ethereum in 2016 when we actually had a drop of 36%, but that was followed by soon enough a very bullish run, which was of over 20,000% all the way through February 2018. So of course, this was early stages of Ethereum. We most likely won't see that again, but you can see that not all death crosses are certified signals that it will be a bear market indeed. As you can see, Ethereum flipped from a momentarily bear condition all the way to bullish conditions, where we saw a huge spike in price for Ethereum. As I said before, compared 2018 and 2022 to now, these marked huge bear cycles for Ethereum, but for crypto as a whole, not only for Ethereum. Of course, these, if you remember, if you were here, you saw that these years were very bad for Ethereum and crypto as a whole, because in 2018 we saw 90% drop in Ethereum from that cat bounce that we saw, and then the same thing happened in 2022 with a more or less 40% increase before we had a 72% fall on the price itself of Ethereum. So we're left wondering if this is going to be what we're going to see right now, or is going to be just like 2016 or 2021. How can we predict and go with this and check if this is going to be the case? Well, you use other indicators. As I said before, if you use RSI and volume to see if there's actually real pressure behind it, because like I said on Wednesday, we had a huge spike in price for Bitcoin and Ethereum, but that was paired with no volume at all. And what did we see? After the Fed meeting, that slowed down quite a lot. So we saw a huge spike in volatility, huge spike in price movement, but not followed by increasing in volume. So the volume, the amount of dollars backing this movement was shallow, meaning that this movement, it was all puffed up, it was all big and jacked, but then that did not hold the price itself because it had no volume to back it up, meaning that the price stagnated and we went back to the prices that we were before. So the Fed meeting was just a kind of sort of like a bait for everyone that was trading in the market, maybe created a little bit of tension, liquidations, just because IV went through the roofs. So as I always say, you can have an idea on what could happen and go with it and be prepared to change your opinion. As I said here, nothing is guaranteed that this will be a bear market, but nothing is guaranteeing either that this will be another great cycle for Ethereum, especially because Ethereum is treating us poorly these days. Every time I jump into a call with any other crypto guy and he has Ethereum or she has Ethereum, we say the same thing. We are disappointed in Ethereum because it is not holding up. At least Solana, if we were buying before, we were buying at 60, at 70, maybe $100. But no, if you were buying Ethereum prior to Trump being elected, you were buying Ethereum at better prices than you are right now. So it makes no sense for everyone that is holding Ethereum. Everyone is very bummed of holding that coin right now. So as you can see, since the start of Ethereum, we had a total of 7 cases of that cross signals. And that started since November 16, and then April 18, September 19, April 20, January 2022, September 23, and now August 24. So for 3 times we saw in April 18, September 19, and January 2022, we saw that this indicator proved right. So we had very quick spike in price followed by a huge drop in price, and that drop in price was throughout months, creating that bear cycle. But we have April 2020, January 2022, and August 2024, when we actually did not see the continuation for that fall. So we did see a fall in price, especially during COVID pandemic times, there was a huge movement in price, but that was followed by normal correction and upwards movement. So we don't know. No one knows if we should expect again something like that to happen. Just, we're going to fall. We're going to get to a bottom. We're going to confirm that is a bottom by bouncing on that support a little bit before going back up. Or worst case scenario, we're going to drop down dead like we saw in April 18 and January 2022, where we saw an upward movement, which was just a fake out followed by a huge drop in price. But as we showed before, I took out the Bollinger Band so it doesn't get too cluttered right here. We're testing a very strong place right now. We're testing places of huge importance. This area where we are right now, which we can go all the way to 2022. We tested this as resistance. Then after a while, it became a support. And now we're testing it again as a support. So will it hold the price of Ethereum or not? We have to take in consideration this and that we already touched twice the bottom here of the RSI. We already went into oversold for this cycle. So maybe now we have bottomed out, and on Ethereum at least, and we should see movement. So first of all, we need to fill this gap right here. When we are overextended from an average, or especially something very important like the 200 moving average, we tend to correct by going towards it once again. This is how the Bollinger Band works. For example, once you expand a lot, there's a huge time of consolidation, and then the Bollinger, you will see it will funnel up into a very, very tight, narrow space, and then it will explode once again. So now we have been very, very far right here from the moving averages. You can see something that we haven't seen since March 2024. And guess what? Once we get so much extended from, we get very, very far away from the moving average, it kind of calls us back, it kind of says, hey, bring your ass back here. And this is what it always happens. And even when you go to the bottom, you see it slowed down, it went to the bottom, and guess what? It slowly made its way, they both go towards each other here, as we saw in November 24. And now it exploded again. We went back towards the moving average. It exploded again to the bottom. We now are on a very, very strong place right now, a very important place, which is the 18 to 1900s. We have to keep an eye on that, not on the 4 hours, not on the 2-hour charts, but on the daily and weekly, because that's when you can get in on your spot trading or on your leaps, not on the day trading. On the day trading, you just go right here to 1-4 hours. You don't even care about the macro. You just care about micro. You just care about very small indicators for scalping or for day trading, not for spot holding, or for, leaps where you have to hold it for half a year, 1 year, 2 years, This is what you should be looking if you want to make these longer trades. And you can see that even on Bitcoin and Solana, we are on strong places right now. Solana is on a very, very strong spot. If it holds, we can call this officially a bottom for Solana. So the 120 to 125, look at how many times here we are looking at it. So we looked right here, we looked at it right here, we looked at it right here, and now we are once again looking at it right here. And all of these times it held strong. So we are confident that maybe for Solana at least, we can hold strong on this place right now. For Bitcoin, this brings us to a place of moving averages. We're testing moving averages, the 69,000 being a place where we know if it reaches, we are most likely looking at a bottom because it marks the all-time highs and the top of the last cycle. So now it should hold Bitcoin a little bit, and it is a very psychological number as well. And now we're holding on to the low 80s. That is now our stepping stone. If we're able to overcome that, then yes, we could call it a bottom for Bitcoin as well. But again, we need to look in these wide time frames, which takes time. You know, it takes patience before entering these longer trades, entering these spot positions or these leaps, as I was saying before. So as always, if you have your cash parked and you're waiting to get into any good positions, what you can do is you can go on the copy trading right here on the topics. 520 people are here already, and you can see this beautiful diagonal line right here going from bottom to the top. This is the performance of our copy trading. We have our traders that are doing very, very good, and even though we are losing momentum on the yield part of things, it's just because we short volatility. So now we have to wait for huge opportunities to have very amount of movement in the market for us to get in and short volatility and make money. But overall, the total P&L is of 80%. So if you had deposited here in May 2024, guess what? You would have made 80% out of this strategy. So that being said, you can see a lot of long liquidations right here. $237 million were liquidated, and 71% of all positions were longs that were liquidated, people that thought the markets was going to go up. And this again goes back to what I said on Wednesday. Huge movement without volume, it is a huge trap for leverage traders. So this is what we see right here. A lot of people got liquidated because they thought that movement was going to be constant and was going to keep going. And if there's no volume to back it up, it's going to slowly, burn out that flame until we don't have anything left. And now for Ethereum liquidations, we're looking on the 48-hour. We already took out a lot of people liquidated right here at the 1945. And now the bottom looks clear if we compare that to the 2000s. Now the 2000s could be another place for Ethereum to look for after this liquidation right here. You see a huge wick, and then now we're still following with a red candle, but this may be slowed down right here at the low 1900s. So keep an eye on Ethereum before you get in for longer trades. This is not to say that Ethereum will bottom out and go up, or is not to say that Ethereum will go to zero. This is like an opportunity where you have to keep an eye on for you to get in at better prices than anyone else. Imagine you keep an eye on Ethereum and Ethereum actually confirms that it's going to go up and you are one of the first to enter. And then you hold Ethereum all the way to 5, 6K, 7K. Imagine the happiness of holding these leaps or just holding these calls, or even just holding Ethereum spot when other people would have waited for Ethereum to show another pattern or to show other things, or they would just be thinking that it would be a dead cat bounce, all these sorts of things. So you have to keep an eye. You have to keep both ideas for a bearish and a bullish situation open-minded, so this way you can get in at better prices and early than anyone else, which is where you make the most money. So I hope you guys enjoyed this video. If you did, please comment down below, and I hope you guys have an amazing end of the week, and I'll see you guys on Monday. Peace.